What's going on, guys? It's your boy Stas here. Welcome back to another video, and happy 4th of July, by the way. Cheers. I appreciate you all for tuning in, and you guys know what 4th of July calls for. Well, I mean, it calls for a lot of stuff. Eating a bunch of food, spending time with friends and family, and of course, celebrating the 4th of July, Independence Day. But it also has to do, or calls for, a peach milkshake from Chick-fil-A, which is my favorite milkshake by far. So we got one of those today. Cheers, guys. Let's dive into the video and break down 5 oversold stocks I'm watching right now. We're going to break down the charts, entry exit points, what I'm looking to do. So hit the like button, feel free to subscribe, and let's dive into it. So you know at this point, you should know at this point, stocks are pretty much hitting all-time highs. Maybe not every individual stock you guys own, but the indexes are. The S&P and the NASDAQ in particular, and the Dow Jones is now about 200-300 points away from all-time highs as well. So we're pretty much there. We're pretty much there across the board here. And with that being said, there are oversold stocks out there. You gotta, look through, what's the term here? Kind of try and find the needle in the haystack. Well, not really needle in the haystack, but you guys know what I mean. You got to find the ones that look good on the charts, that are oversold, and they're out there, even when markets are hitting, indexes are hitting all-time highs. So the first stock I want to go over here is BG, which on Friday, well, not Friday, today's Friday, yesterday's Thursday. Today the market's closed, by the way, guys. Yeah, it's a bit of a funky week out there, but BG is pretty beaten up here in the short term, all while maintaining an uptrend. You guys can see if I get this channel tool out, you guys will notice exactly what I just said. We're making higher highs, higher lows, maintaining an uptrend here. But in the last couple of, trading days, we're down about $10 a share. You can see we hit roughly $88 back in the middle end of June. Now we're at $78. Again, all while maintaining this trend. So for this upcoming week, and I know it's Friday, we have Saturday, Sunday, a couple days left to go till Monday. But if you remember this stock on Monday, next week, watch it, because this spot right here, where we are, this is held as support time and time again over the last couple of weeks. No joke. So each time we've gotten oversold on this stock, down to the bottom of this channel, towards these moving averages, it's been a good buying opportunity, at least over the last couple of months, stemming back to, back to February. So I'm watching BG very closely here as it is oversold. Chart looks good. Let's see. The next one here is XLE, not an energy stock. Well, it's an energy ETF. It's not a stock, but it's a basket of stocks. So I guess technically, the video's 5 oversold stocks, whatever. XLE is definitely one of them here that, maybe not too oversold on the RSI, but considering where it was a couple of days ago, we hit $92, where it was a couple weeks ago, where we hit about, actually months ago at this point, $94. We're pretty beaten up at $87 a share. And look at the chart here, guys. We're putting in higher lows, clear as day on XLE. We have a cup and handle. You guys notice the cup here, the handle. You're noticing that? And now we're starting to break out of these moving averages at about $86, $87 to the point where, okay, and by the way, we're peaking out of the highs from the middle of May, if I draw this out. So with all this forming right now, guys, this could be setting up for a breakout towards $90 right here, right? Maybe $92.50 where it was a couple weeks ago. So this looks really good, man. Ascending triangles playing out, higher lows being put in, cup and handle. So I think this could, even though it's not extremely oversold RSI wise, it's still down $8-9 from the recent high, which is why we're putting it in this video. It's still one worth watching. Even though it's not extremely on the oversold side, simply looking at the RSI. But it's gaining momentum, right? Gaining momentum, and we still have around $5 to cover here to get us back to where we were just about 2-3 weeks ago. So I like XLE. Apple is another one, which this one's obviously in the crosshairs right now with the trade war going on, tariffs. You know, it's definitely down because of that, right? And it was downtrending way before Liberation Day. I mean, this entire year, Apple stock has been down. We hit 260 all-time highs back in December of 2024. So this whole year we've been down. We got all the way to 168. At one point, Apple was down 35% from all-time highs. But now we're getting back over 200, starting to break out. We are pushing out of this trend line here. We're above both moving averages. So Apple kind of looks like it's reversing here. But again, it's in the crosshairs with with this whole trade war going on. And you guys know Apple is not going to bring all their manufacturing to the United States. That's a pipe dream. That's not happening. Sure, they could go to India, whatever. They are going to India, but at the end of the day, a lot of their products still come from China right now, and that's a big risk. We all know that. And once we get a deal, this is the thing. Once we get a deal with China, we really start getting past this, which will happen eventually, man. It's going to happen. Apple's probably going to start breaking out to all-time highs again. It is what it is. It's pretty predictable. But the thing is, the big question mark is, when will this deal happen? When will we get a deal with China? Is it going to be in 3 months? Will it take a year? Will it take a week? You know what I mean? That's the big question mark. But if you have a longer time horizon, you want to ride it out, and you think a deal will eventually be made, now might not be a bad time for Apple. And I was considering it literally a week ago when it was at 200 to buy a little for a trade. I didn't do it, and now it's starting to pop. I'm kind of kicking myself a little bit. I wish I bought a little bit, but we'll see, because look, it might cool off a little bit in the short term. We are a little hot in the very short term, and we are approaching this resistance right here. You're noticing at about 213. That's where we triple topped back in April heading into May. So this could be a spot where we die off a little bit, and that could be the entry opportunity. Potentially. Do your own research. As always, guys, trade at your own risk. And for all we know, man, this could easily start going back down to under $200. Earnings are coming up here, by the way. And that's the thing. If earnings are strong on the last day of July, 31st of July after the bell, if earnings are strong, guidance is good, maybe we get word from management, we get some guidance regarding tariffs, maybe they're not that bad, that could be what pushes Apple through the roof, man. So I don't know. I just think it's going to go a lot higher here in the coming months, once we get a deal. But again, the question is, when will that happen? I don't know. Again, trade at your own risk, guys. It's a risky bet here. But before we dive into the next two stocks here, guys, make sure to join my free email stock newsletter. I'm not sure if you knew this, but I send out my top stocks weekly to my email subscribers, and that link is down below. And if you guys want to check out my Patreon, see how I'm building my portfolio, that's also linked down below. It's not free. It's $10 a month for the first tier, or the second tier, or whatever. But yeah, it's not much money, and you get to see how I'm building my portfolio, all that good stuff. If you guys want, link down below. And now let's continue on. ARM Holdings, ARM, is another one that I'm watching right now. Pretty beaten up in the short term, down from 168 to about 155, and there could be more downside. That's the reality here. There could be a little more downside, maybe to 145, 150. But ultimately, I see this dip being bought up. I like the chart, clearly reversing, and it's kind of the same thing we're seeing on AMD. AMD looks great, breaking out little pullback here. Could be a dip buying opportunity. So that's simply what I'm looking at on ARM Holdings, guys. Not to, make it too complicated. We have earnings on the 30th of July. So in a couple of weeks here. And yeah, if it gets in this little pocket between 140 to 150, that's going to be an interesting spot on ARM Holdings. And Johnson & Johnson's interesting here, guys. We're down a good $15 from the recent highs. We're approaching a big resistance at about 158, 160, which if this is able to get out of there, we could be getting the big breakout from there, guys. And we're setting up nicely. We have a cup and handle. You guys are noticing the cup and handle right here. Very nice. You're seeing that. And really, it just has to break over 158 to 160. That is the level that ultimately needs to break. I'm going to set my alert now at $160 a share. Maybe I'll do another one at 158. We'll see what it does there. And yeah, guys, it's beating up. It's one breakout away from really starting to fill the gap back to 170. And I'm here for it. I'm not in the stock yet. In fact, I'm not in any of these stocks right now. But they're on my watch list, clearly. And I'm watching them for this upcoming week, or I would not be covering them in this video. So what do you guys think? Let me know in the comments your thoughts. Run the likes up. Feel free to subscribe. Get yourself a Chick-fil-A peach milkshake, man. If they sponsored this the channel, that'd be amazing, man. What if I got like a free peach milkshake a day just to shout it out? I'd be 350 pounds, but I'd enjoy myself at least, right, guys? So with that being said, happy 4th of July. Have a great rest of your day, guys, and I'll catch you in the next video.